Cadiz was established by brothers Frank and Ray Cadiz in 1993. It is a niche operator focusing primarily on equity derivatives, structuring and asset management. It recently sold 60% of its securities business to BNP Paribas. Cadiz has a market cap of 368 million rand, a price to earnings ratio of 115. Did I make a mistake?
No, no mistake there.
So talk me through what's happening.
Look, this is a business that's used to be the market's darling. They bought out African Harvest, and that bulked up their asset management business quite nicely. The market was in love with this for a bit, and it rallied quite nicely. And then things started going wrong with the operation as a whole, started losing assets on the asset management business, partially due to performance. And I think we've seen the stock market reacting accordingly over the last couple of years.
Paul, is this a potential turnaround story in your book?
Could be. I mean, they have done this deal now with BNP Paribas, who presumably want to get into African equity advisory work. So that's on the securities side of the business, the actual broker member. Asset management still there, derivatives and structuring still there, private clients still there. The new CEO, Fraser Shaw, seems determined to get the costs right. And I did also notice that Piet Viljoen's crowd in Cape Town regarding capital management has taken like a 24-25% stake here. And I assume that means because he thinks some element of the business has got value unlock potential. So when all is said and done, will we see some sort of blow higher here? Maybe. But I think, again, it's a little bit uncertain at this time.
Surely in the value manager, but what did we say earlier? What was on a PE of 115?
There you go.
That completely.
I think to be fair, that sort of was based on this restructured entity with the BNP Paribas.
But it gets you out of investing in Cadiz.
Thankfully it does. To be fair, that stock price, while it looks low, there is a special dividend that they paid out of 50 cents on that price. So investors haven't quite done as badly as the graph may suggest over the last year.
But, thank goodness for that.
But it has been a painful year nonetheless. Look, I think there's a lot more uncertainty about this business and where it's going, so I'd probably be leaning to take a wait and see approach to this.
Perhaps it's too late for some to take a wait and see. Tsepo points out that there's been a lot of pain taken in the share price to this point. What do you do now, Paul, if you hold Cadiz? Do you continue holding?
Yeah, if you're a long-term holder, you might as well wait and see what happens, because these are businesses that live or die by their perceived status as growth entities. You know, in financial services, you need to be seen to be adding earnings growth, momentum, assets, and so on. So they could get their mojo back, but could take a while too, so not hot for me.
I didn't ask you, but anyway, thanks for answering. Hot or not on Cadiz? Tsepo?
Not hot for me.